is very strong for Bitcoin. And if Bitcoin is strong, as we all know, that creates a massive ripple effect throughout the entire kind of crypto ecosystem where, good things can happen at the very least.
This content is brought to you by Uphold, which makes crypto investing easy. I've been a user of Uphold since 2018, so I trust this platform and I can vouch for it. They have a full functional app, a full functional website, and they carry Bitcoin and all the top altcoins, including stablecoins. You can also trade precious metals on this platform, and as well as 37 fiat currencies. So Uphold is available in over 150 countries, and they are a safe platform. They have full reserve of customer assets. They don't commingle or lend your funds out, and they provide audits of their reserves. So it's a safe platform, and I trust it. I vouch for it, and I've interviewed the CEO, the CFO, and other representatives of the company. So if you'd like to learn more about Uphold, please visit the link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Caleb Franzen, who's the founder of Cubic Analytics. Caleb, it's great to have you back on.
Tony, good to see you, man. I think the last time we were here was back in April, I want to say. So 6-7 months ago, it's a good recurring basis to get back together and talk markets, man.
Yeah, absolutely, man. And, you provide some valuable insights in your newsletter as well as on Twitter, or X, as Elon would call it now. So I've been following you and, appreciate your insights. So I wanted to get you on here to go a bit deeper and talk about, what's the outlook for Bitcoin in the short term as well as long term and some of the top altcoins. What are your thoughts on the recent rally, and do you expect Bitcoin to go a bit higher?
Things are looking pretty solid. I think at the beginning of the year, I started out a little bit towards the doom and gloom side. But one of the things that I said was, regardless of what was going to be happening in the markets this year, I was going to be buying assets. I was going to be buying equities. I was going to be buying Bitcoin. And that's exactly what I've been doing pretty much all year. Back in January, something very important happened. And that was the price of Bitcoin got above the short-term holder realized price, which is basically the short-term cost basis of all Bitcoin that has been transacted within a 6-month window. And historically, that's always a bull market signal. If price can get above the short-term holder realized price and stay above that level, good things tend to happen. Every bull market in Bitcoin's history is characterized by that one simple fact. Then a bunch of other incredibly bullish signals happened thereafter. And so piece by piece, indicator by indicator, we've been stacking bullish evidence. And now we actually have the fundamentals to really kind of back this up, right? We have the halving, which is basically 160 days away. We have spot ETFs that are basically, and I truly believe plural, are going to be getting approved likely in a blanket kind of approval process. And then if my kind of macro outlook is on track, we're going to have continued disinflation, which is likely going to be bullish for assets across the board. I think it already has been very bullish this year. Look at the stock market, look at Bitcoin, look at Ethereum, so on and so forth. But if that disinflation continues, as I kind of look forward, I've been referring to it as non-recessionary or disinflationary rate cuts beginning in the third quarter of next year. At this point, I'm not willing to entertain rate cuts before then, but my thesis right now is that the Fed will start to do a total of 100 to 250 basis points worth of cuts. If they do that from a pause of 5.33%, we're really going to have still tight rates, still high real federal funds rate, real interest rates, so on and so forth, but just less restrictive than, if they continue to pause. And so I think the Fed is recognizing that. They're not openly admitting it yet because they're still using their rhetoric and forward guidance as a policy tool. That's one of the big benefits that they have. They can forecast to the market, even if they're kind of fibbing, right? Or they want to maintain maximum flexibility. And so they're giving themselves a long leash with a lot of slack. And so, man, I'm feeling very optimistic about Bitcoin, especially right now. I've recently started buying Bitcoin mining stocks once again. I was trading those at the beginning of the year with a lot of success. And now I'm really kind of viewing this as a 6 to 12 month thesis for the miners. So I'm basically going to be DCAing into those over the next 2 months, probably daily. And so, I'm feeling very optimistic about things right now. So I'm happy to kind of take that wherever you want, but that's kind of my baseline.
Yeah, and great points you brought up, and with the macro and the Fed and their narratives and things they're doing, and it seems to your point, they are officially paused. Now, there's always the possibility that they could raise, but it seems like they're officially paused. And as you mentioned, with the halving coming up, the Bitcoin spot ETF approvals around the corner, certainly a bullish time. So, if you can share the Bitcoin chart and tell us what you're seeing for the short term. Some people are saying, hey, this is a start to the run up to new all-time highs. Some are saying, hey, this is like a 2019 move. A retracement will probably hit a certain, Fibonacci level and then roll over, and then a slow, steady grind to new all-time highs in 2025. What's your thoughts and thesis around that?
So here's Bitcoin. And, one of the things that I like to use, I don't rely on the exponential moving average specifically, and I don't look at the simple moving average specifically. So something I'm trying to kind of shine more light on is something that I'm calling the 200-day moving average cloud. So I'm combining both of them. The EMA is shown in teal, and the SMA is shown in yellow. And we could see very clearly this has been a strong level of both dynamic support and resistance. In my opinion, so long as we stay above this level, good things happen. We've been able to stay above it now after a brief consolidation below. You can see in several cases here, we actually used it as resistance, flipped it into support, taking off, right? So this is very, optimistic kind of price structure overall. And now we've really kind of cleared through this range as well. This was a level that I was highlighting back in January, actually, when we got above the 200-day moving average cloud, saying now we need to focus on the next level of structural resistance. So I was calling for, this range even above 25,000 going all the way up to 30K back then. And, we ticked it a couple of times and we've sold off since then. So now we're back above it. It's now valid potential support. And so I continue to think so long as we stay above this level, which is basically from 31,000 all the way to 32.8K, we could see price rebound here for sure. But overall, this chart looks fantastic. One of the things that I mentioned earlier was this short-term holder realized price. And so as we look at the dynamics right now with respect to the short-term holder realized price, it also looks very similar to what we're seeing on that 200-day moving average cloud, right? We flipped it into resistance. We had the breakout here, support, temporary breakdown here. This was a bit of a concern for me, but so long as we're back above it, I think we can be very, very optimistic. And so one of the things that I say about my approach personally is that I always try to stay dynamic and flexible based on the data and the chart in front of me. So if we fall below the short-term holder realized price, you're going to see me on podcasts, you're going to see me on Twitter sounding a little bit more defensive, not necessarily bearish, but willing to be patient and willing to kind of consider downside scenarios. If we stay above this level, I'm going to be coming on these shows saying we're going higher, we're going higher, we're going higher. This is bullish price structure because it is. So that thesis might be wrong. Things can change. Markets are dynamic. We don't know what the future holds. So it's really important to kind of have, first of all, levels of invalidation and places that we can kind of stay dynamic based on data, based on indicators, and based on statistics. And so as I look at this right now, I also want to highlight one other fact, which is that this short-term holder realized price, look at the slope of it. So in terms of the rate of change, that red level is grinding higher and higher. That is generally emblematic of a bull market because it indicates that short-term holders are increasing their cost basis over the past 6 months. And that's what you want to see in a bull market is people continuing to bid, price grind higher, people keep bidding, and that short-term holder realized price steadily moves higher. If we look at something like the long-term holder realized price, we see almost the exact same dynamic taking place, right? It's much flatter, but if we really kind of zoom in on this level, and let's actually even go a little bit closer, we can see now that this is really starting to tick higher basically since August and September, right? So as this long-term holder realized price also starts to grind higher, again, this is very bullish for the long term. The last chart that I'll share with Bitcoin is, I mentioned this 200-day moving average cloud, but the one for me that's the most important is this 200-week moving average cloud. So basically the exact same indicator, and we're solidly above that. Once again, I outlined this as a price target in January, 25,000, and said if we can get above there, it'll be very bullish. Sure enough, we broke above and we've flipped it into support now several times, right? We've been riding this 200-week moving average cloud as almost perfect support. We haven't closed below it all the way since March of this year before the banking crisis, right? So the fact that this is still working as dynamic support, and it's also has a positive / rising slope, is very strong for Bitcoin. And if Bitcoin is strong, as we all know, that creates a massive ripple effect throughout the entire kind of crypto ecosystem where, good things can happen at the very least. I'll just leave it at that. And so, I think whether or not you're someone who leans towards being a Bitcoin maximalist, whether you're a short-term trader, whether you're, solely focused on investing in altcoins, you have to be watching these Bitcoin charts. And at the very least, they're all showing us bullish dynamics right now. So, as far as I'm concerned, this looks fantastic.
So do you see the move upward similar to 2016 or a 2019 to 2020 type scenario? I know it's hard to predict that because, like you said, the charts, the market's dynamic, and we have to wait as the data comes in. But what does your gut tell you? Because you, as we discussed, you have these narratives, these strong narratives, like the Bitcoin having, and as well as the Bitcoin spot ETFs, which could send the price a little parabolic, maybe not to new all-time highs in the immediate, but in the short term, a strong move up.
This cycle, in my opinion, is very different than prior cycles. I still expect to see the halving have a very similar effect. Everyone who I talk to, even people who are in the crypto ecosystem, a lot of people are dismissing the impact of the halving. And someone asked me recently, like, Caleb, based on your thesis with the halving, with these non-recessionary rate cuts, with the spot ETF approvals, doesn't everybody know all of this? Isn't this already priced in? And I was saying, I don't think it is, because everyone is talking about, the halving isn't going to have as much of an impact as it had in the past, if any impact at all. People are debating if the halving is even a useful indicator for price or a catalyst for price. Everyone knows about the spot ETFs, but a lot of people aren't really sure. I saw someone recently talking about, hey, Canada's had a spot ETF for over a year. How come that hasn't created? So even still, there's all of this concern about whether or not the spot ETFs are going to have a catalyst for moving higher. And I don't really think too many people are talking about non-recessionary rate cuts in the third quarter of next year. So in my opinion, not much of this is really priced in yet. And I think one of the big kind of takeaways, so let me just tie this back into your question, which is what kind of cycle does this mimic or mirror? If I would pick any of them, I would say 2019, just because the risk of a recession is still there. So, if we think back to 2019, we bottomed in December of 2018 and we started to move higher from there. And then COVID happened. We have some exogenous recession, which brought price down significantly, right? We fell from over 10,000 back down to 3,500. We could still have one of those scenarios. So I don't want people watching this to just hear me come on here and just sound like it's up only from here. We still have to consider downside scenarios. And so I would say maybe 2019 is most similar. But in the event that we can avoid that recession, get those disinflationary rate cuts, and then we have the halving catalyst plus spot ETFs coming online, I think one of the big takeaways that I had from that whole Cointelegraph debacle was that we had a $5,000 candle in 15 minutes on unverified news. And so the thing I've been encouraging people to think about and ask this question is, how does price react to an SEC press release, if not a press conference, about spot ETF blanket approvals? How does the market react to, in a sustained manner, to verified news about this getting approved? How does the market react to BlackRock really coming on TV every week, every month, pounding the table on Bitcoin, advertising, calling up wealth management shops, the whole 9 yards to market? I mean, I used to work in wealth management. We used to get hounded all the time by these ETF companies and their sales reps to talk about their products. They wanted to take you out for lunch, this, that, and the other. So what does that look like with BlackRock, with Valkyrie, with ARK, with, Wisdom Tree, with all of these companies coming out, promoting their spot Bitcoin ETFs? And so if we had, like, let me tie this back now because I'm going on my soapbox tangent because I get so excited. If we had a $5,000 candle in 15 minutes, genuinely ask yourself, what does that market environment look like when we get a formal announcement, press releases from the SEC, press releases from BlackRock and all these ETFs, so on and so forth, in a sustained manner? And so I think if and when that does happen, this market environment or that market environment is going to look completely unlike what we've ever seen in the past.
Yeah, it's a good point. I've been also thinking about that. Once that news goes live, what's going to happen, right? It's going to be euphoria. People are going to go a bit nuts. But also in the back of my mind, I'm cautiously optimistic because I see in the macro, look, the stock market doesn't look that strong. It looks a little bearish. In addition, you have these economic factors where debt is at an all-time high, not just for the government, but for consumers, credit card. And it seems like something is going to break. I'm not saying I want that to happen. It's just, it feels very 2008-ish, not with the housing market, but personal consumers and their credit card debt and car loans and so forth. So I'm like, how can these two things be running in parallel, right? But maybe, like you said, it's a completely different time. The Fed and the central banks can print money and artificially inflate certain things where they can inject money behind the scenes. I don't know, but this is where all my thoughts are. And I'm like, I don't know what's going to happen next.
It's tumultuous for sure, right? And I think generally I had a very defensive kind of outlook on what macro was going to be this year. And I think everyone, regardless of what their preconceived notions were going into the beginning of the year, should be pleasantly surprised at the resilient nature of the economy, of the labor market, of the US consumer. You talk about consumer debt, but what most people don't do is divide that consumer debt by personal disposable income. So and that level is at historic lows, right? It's certainly creeping up higher, but on a relative basis, relative to income, that debt is very, very manageable actually. And the amazing, I saw so many headlines about this a couple months ago about, consumer credit cards crossing $1 trillion in balances. There's still like well over 2.5 trillion in unused credit card amounts. So basically these consumers have the ability to tap into much, much more credit if they actually wanted to and needed to. And so the fact that we're simply at $1 trillion in and of itself is not reflective of a negative economic environment from my perspective. And look, I'm someone who used to be a hardcore gold bug. I used to be a massive advocate of Peter Schiff and what he used to talk about. And so I used to be extremely concerned about things like deficits and credit and the Fed's money printing, until you realize that it really doesn't create actionable investment advice. And at the end of the day, I think you kind of have to ask yourself and look in the mirror, are we here to be right, or are we here to make money? And so if you're a trader, you're certainly looking to be both, right? If you're going to make money, you almost intrinsically have to be right. But I think if you're going to have your focus be on macro, I see so many people who have really kind of pigeonholed themselves into a corner about being very bearish. And it's that kind of classic phrase about the broken clock can be right twice a day, right? And eventually those people will be proven correct. We are certainly going to have a recession. It's just a matter of, does that recession happen 6 months, 12 months, 24 months, or 36 months down the line? And if it does happen somehow 36 months down the line, what do asset markets do over the next 36 months, right? So what, are you going to stay sidelined for the next 36 months because you think a recession is coming? Yeah. I mean, be my guest. That's not how I'm going to, invest and allocate my personal portfolio. So for me, I stopped paying as much attention to that. And I started kind of approaching it from almost like a first principles perspective, and kind of diving a little bit deeper into these numbers and starting to realize, those talking points are exactly that. They're bearish macro doomer talking points. Yeah. But again, I don't think that they actually provide actionable, sound investment advice, I guess you could say.
Yeah, and that's a great point, Caleb, because I look back at 2020 when the economy got shut down, yet markets were pumping. I mean, it's almost surreal, right? When you think about it, stock market was going crazy, Bitcoin and the crypto market was going crazy in a period where there was panic, fear, and shutdown, right? So it's to your point, like, yes, those things exist, but you can't focus too much on them, and there's not usually that many actionable items from them.
Sure. And I think the biggest takeaway from, this mini conversation that we're having here on macro is, it's really important to remember, and I've talked about this in the past, the stock market is not the economy.
Mm.
Sometimes it's really that simple. The stock market can be impacted by macro and broader economic conditions 100%, but the stock market itself is not the economy.
Okay, Caleb, I'm going to put you on the spot, my friend.
Let's do it.
All right, short term by the halving, what price do you think will be hovering around, and what is the all-time high you're expecting for 2025?
So pre-halving is really going to depend a lot on exactly the pace with which these spot ETFs get approved.
Mm.
Something that I've been saying, I think conservatively, when we do get those ETF approval announcements, even if it's just one, but my assumption is that we'll see blanket ETF approvals. I think we're going to have a $20,000 candle on the daily. I really do think that. So it kind of depends, like, where is price going into that announcement, right? Maybe, today we're hovering between 34 and 35,000. Maybe we consolidate back to 28K. And so we get that $20,000 candle. Great. Now we're trading at 48,000, right? But, what if things kind of continue to go well, Bitcoin's chopping around, gets to 45,000 by the end of this year, right? Basically 7 weeks left. I think that's very possible, that, we could keep climbing into that range. And so if we get that $20,000 candle at a price of basically 40 to 45,000, we're basically at former all-time highs.
Mm-hmm.
Maybe I can share my screen on this actually.
Sure.
Because, one of the points that I've been trying to share is, let's zoom out big time on this. Oh no, wait, where's my, hold on 1 second here.
Mm-hmm.
Here it is. Okay, it looks like there's a lot going on here, but I really promise that there isn't. As we look at Bitcoin cycles historically, every single bull market, we hit the 161.8% extension from the prior bull market. So you can look here, you can take the bull market highs to the bear market lows, draw the 161.8. We at least tagged this level, and in fact, we went considerably higher. If we look at the 2013 peak into the bear market in 2015, we draw the Fibonacci and we create a 161.8% level. That got us to 4,500. We at least went to that level. We went considerably higher, right? But we definitely tagged that price level. If we look at the 2017 peak to the 2018 lows, and we draw a 161.8% extension, that got us to basically 63,000. We topped out at 69K, right? And so it's very simple. You draw a Fibonacci extension from the prior bull market highs to the recent bear market lows, and you draw out your 161.8. And so where does that get us right now? $175,000. And so that's, in my opinion, that's a base case estimate for where we can go based on 4-year cycle / halving cycle, plus spot ETF approvals, plus these non-recessionary rate cuts, right? We're going to have a multitude of factors coming together at once. Very similar to what happened in 2020 with a monetary bazooka being launched and then the halving cycle. If we get not monetary easing, but a less restrictive monetary policy environment, plus spot Bitcoin ETF approvals, plus halving, I think unequivocally we'll get to 175,000 next cycle. And we could talk about estimates above that as well, but for me, I like to think base case. I like to think kind of that lower bound of what's possible. And so I think an assumption that I certainly have is getting to 150 to 175,000 is quite possible, if not plausible.
I would love to have Bitcoin at that price, my friend. It would be a really good day for me. Yeah, I'm excited, and you brought up some great points, and there's a lot of narratives out there, and then the other thing I'm thinking too, next year is an election cycle here in the United States, and I know Biden, at least, and any president wouldn't want to go into an election year with the economy in the dirt, and things looking bad. You're going to get kicked out of office. Mm-hmm. So I feel like, to your point, the Fed, sometimes is controlled by the president, and there's a bit of politics there. There's probably, like you said, going to be those cuts. Some sort of QE, I don't know in what form, maybe coming back, and things looking good from an economic standpoint, but we'll have to wait and see.
Yeah, exactly. And the beautiful thing about that, Fibonacci analysis is it's absent of, commentary, right? It's like what we know for a fact, regardless of what the individual catalysts were, is that every single time Bitcoin tags the 161.8% extension of the prior cycle. And so just keep it very simple. And, I see a lot of people doing some crazy charts online with analogs and this, that, and the other that almost never work. And, somehow they get, hundreds of thousands of views on these analog charts, right? But, I think just that 161.8 is really all you need as kind of a guideline for where we can go next cycle, or potentially this cycle, right? Where we're at right now.
For sure. Now, obviously, Bitcoin is the benchmark, right, that we use to track the crypto market, because we see the higher Bitcoin goes, it's the rising tide that lifts all boats. It pulls the alts with it. Are you trading any alts or investing any alts like Ethereum, Cardano, XRP, anything like that? What's your strategy around alts?
I am, yeah. So, one of the things that I talk about is that, with respect to Bitcoin, invest in it, don't trade it. With respect to altcoins, this is just kind of my view, just because they all bleed out relative to Bitcoin, is I don't necessarily want to own those altcoins for the long run, but I certainly want to be trading them because they're basically high beta Bitcoin. Right. And then for me, Ethereum is kind of somewhere in the middle. You might want to try some kind of market timing. You might want to own it for the long run, but you certainly want to trade it as well. That's just my personal outlook. I totally, respect people who, are quote unquote like here for the tech, and they really kind of see blockchain as the future, and that these use cases are going to materialize, and this is something that they want to own for the next 5 to 10 years. Be my guest. So, now that I'm kind of saying this publicly, I'm sure the market is going to unwind itself in reverse. But yeah, so I've been long injective protocol since 875. I trimmed a good amount of exposure right around 15 and jumped back in the low 14s. I've been trading Lido, Render, Perpetual Protocol. There have been a lot of names that I've kind of been tagging into, trying to get some of that exposure to the DeFi aspect. And then I wouldn't be somewhat of a degen if I didn't have any Shiba Inu exposure. So I have a small bag of SHIB just for the jokes.
Yeah. Well, the one that I've been trading similar to you is Render, some of the AI driven cryptos like Fetch.ai as well.
Yep.
Yeah, man. So it's similar to you. I trade more of the alts, but like there's Bitcoin that I'm never selling, and it's going to be for my daughter and stuff like that. Yeah. So, yeah, I'm excited. Anything else, you want to highlight, for Bitcoin that might be, let's flip it. That might be bear. Let's say, look, everybody's kind of anticipating the high prices, but, could something happen and Bitcoin goes back down for whatever reason?
Sure. I primarily see two kind of bearish catalysts. One of them is fundamental macro driven. Mm-hmm. So yes, if that recession does come, right, as everyone's been calling for the last 18 months, then certainly the price of Bitcoin, as with every other financial asset, maybe aside from treasuries and gold, is going to fall. And ironically enough, even gold falls at the beginning of a recession. So, there's that too. So if that recession materializes, people are talking about this SOM rule, which is an increase of 0.5% from the lows of the unemployment rate. So the recent low in the unemployment rate was 3.4%. The latest data came in at 3.9. So we've officially had a 0.5% increase every single time a recession follows that signal. Mm-hmm. Something else that I look at is the year-over-year rate of change in the unemployment rate. As that kind of goes from a negative year-over-year rate of change to a positive year-over-year rate of change, a recession typically ensues. So that's been flashing now for the past 2 or 3 months. So again, there are some genuine kind of signs for concern here, but I just want to remind people, a 3.9% unemployment rate, 95% of, US economic history would trade for an unemployment rate of 3.9%. That's historically tight. Even if we got to 4.3 or 4.5% on the unemployment rate, that's historically low. So just because I wrote a whole newsletter about this past weekend where I said, I think the title was softness, not weakness, is bullish. So we're seeing a softening of economic conditions, but not actual weakness, right? And I think that's a very important distinction for people to make. So that recession could come, and I think the base case in that is that Bitcoin would fall at least 50%. So take 50% from where we're at today, let's call it 17,000. So that's something that we could entertain. I think another thing that we could entertain is, and like it's purely speculation, but I think some people have voiced valid concerns. It's pretty much out of my realm, but I'd remiss if I didn't mention it, is, concerns around Binance, one of these other exchanges going down. Who knows, right? No one was really predicting that FTX was going to collapse 15 to 18 months ago. Maybe there were some whispers, a guy named Mark Cahodes was talking about it. But that was, that wasn't in anyone's cards, broadly speaking. So, hey, look, something like that could happen with Binance or Huobi or Mexi, or like, I have no idea, right? Like, so something like that would also cause a very substantial correction. I think base case, you would consider 33 to 50% downside in that scenario as well. So I think the bear case at this point is very macro, big picture, right? Fraudulent activities potentially, let me say it this way, potentially fraudulent activities being exposed and exchanges going down. That's not Bitcoin specific, that's crypto more broadly. And then a recession, a Fed-induced recession. And again, that's not inherent to Bitcoin, right? It's not a fault of the monetary network. Look at hash rate at all-time highs, 88.5% of Bitcoin supply hasn't moved in the last 3 months. These are amazing data points. So fundamentally, the network is strong as ever, as competitive as ever. And again, I think that the only quote unquote risks for Bitcoin specifically are the same risks that have always been there: exchange risk, and broader, recessionary risks. But no asset, particularly crypto assets, aren't immune from those conditions ever, right? So these are, the usual suspects, if you will.
Yeah, that's great point. And, Binance, like you mentioned, is under investigation. There's been calls from members of Congress to do all kinds of criminal investigation and take legal action. Now, nothing has come to fruition as yet, but there's always that risk. But, I think you and I are both aligned that the higher probability of the bull case, it can play out versus the bear, right? Are you in agreement with that?
For sure.
Caleb, awesome information, man. Always great insights. Thank you so much. Everyone, check out Caleb's Twitter profile as well as his email newsletter and Substack. It's really good. Thank you, Caleb. I appreciate it.
Thanks, Tony. Talk soon.